This is London with Bitcoin Spike. Please hit the like button. I've got a new pattern for you. If you like these updates, please let me know. Yes, guys, looking at the daily, we also have a problem with the hourly. Pay attention to this video, and I mean it. Hit the like button. It lets me know that you guys are trading, that you appreciate these videos. Cup and handle, bam, on the daily. Cup and handle on the daily, bam. What's the problem? We're up and out on the daily. Line of resistance flipping. Take a look at this, guys. Line of resistance flipping, attempting to go into support. The problem isn't the cross trend line that we were parked at essentially all day long while the rest of the equities were doing well. That resistance to support resistance, guys, that specific cross trend line. Reason I brought it to you, we've been stuck at it. You guys know that since that video, essentially. Some nice volatility, pardon, in that zone. However, the problem right now is not necessarily just the cross trend line. The problem is also the difference between the daily and the hourly. The daily shows that we're up and out. Oh, yeah, the daily shows we're up and out. However, look at the hourly. On the hourly, we have indeed, guys, we have a kind of a, what would we say, not a distinguishing factor. We have a lack of confirmation. You see on the hourly, we still haven't broken through the level of resistance on the cuppage and the handle at all. So let's go ahead and go through the one benefit that we have with the hourly is that we have a higher price target. We have a higher price target. Boom, let's take a look at this. Let's move the amplitude up from the point. If we were to get to the breakout, a 19% move on the lines, just on the lines, guys. More aggressive on the candle wicks. Looking at the candle wicks, let's go ahead and do this on the candle wicks just to make sure you have these specifics. Guys, just these specifics are hugely important. Looking at the candle wick function here. Okay, let's go ahead and look at the candle wick function, maybe slightly larger, depending upon where we might break out. Almost 20%, guys, almost $5,000. But from the current price, looking at that, it'd be a 25% move, about a $6,000, guys, getting tacked on to Bitcoin. That would put us up in the $30,000 range. We do have a target at that level from a failed descending wedge. Okay, shout out to the VIP. I'm going to go through the daily targets in 1 second. First, I want to shout out and just say, guys, I'm impressed with your trading again. Freddie, way to go. 157%. Boom. These are trades today, guys. Look at this trade last night, 61 G's, guys. 61 grand. Boom. That just real aggressive shot to the upside she took. This is, I believe, Anthony or Bill. Anthony, 119%. Congratulations, Anthony. Bill, 200%. Way to go. Also, shout out again to Vlad. Vlad with a $100,000 trade this last week. Boom. Rolling on it, my man. Keep trading. Keep trading. Be selective. Love it, brother. In terms of this level of resistance, the big point of this video is the daily. Okay? I'm going to add in with that is reconfirmation with equities going green into the Friday. Guys, NASDAQ up well over a 1% point and a half, right? Resistance to support resistance. We called this yesterday, and we've been parked at that line, right? Didn't want to bring it, just had to. But the specifics, that video yesterday, shout out, and guys, let me know in the comments you got that video. This level of resistance flip to support on the daily is perfect, right? We're looking great, right? Minding that cross trend line. Minding that. Now, in terms of that hourly, this is just to reinforce the principles here. On the hourly, the cup and handle, we still, guys, have some room. If you're looking for a breather here, yeah, we need to get up and over this line of resistance here for a trade to really engage. Yesterday, you guys know this. Yesterday, I provided a hot zone, right? A 20x hot zone. I'm going to raise that today, given upon where we decided to break out in the level of confirmation we're currently going in on the daily. That does complete that cup and handle pattern. Okay, I'm going to go ahead and raise. The threshold a bit. Okay, I'm going to say if you have a lower entry on Bitcoin right now, congratulations. We're in a bullish pattern. By the way, the cup and handle is a very successful pattern with one caveat, in a bull market. Okay, so some of the framework that we're looking at, it requires a bull market. So we're on that cusp. We're in the throes. This is going to be an important cross-trend line. It's the most significant cross-trend line. I know it's not an external line of resistance, but it's one of the most heavily featured cross-trend lines, if not the most heavily featured resistance to support resistance kind of mid-level threshold line that there is on Bitcoin right now. Period. As we look at let's look at some additional features here. One quick minute here. looking at the expansion, so we do have a higher threshold. And let's go ahead real quickly before I forget, in terms of the target to the upside for the daily. And let's remind everybody the following. Guys, while everyone else was just spitting hype, we were doing what? I got to tell you guys. I had someone research this. The specific triple bottom. We were the only group that really put this into the formula, right in line with the New York Institute of Finance. That's why we focus on the New York Institute of Finance, the triple bottom. I showed this to traders. I showed this to people that I know. They couldn't receive it. Being plugged into Wall Street caliber TA makes a difference. That amplitude move to the upside, boom. Look at that. Perfectly hit, guys. Perfectly hit. So I'm just going to remind you that, yes, we brought this formation, the triple bottom, to you. Not a hype, not a this and that, not maybe. No, we brought you a textbook triple bottom, right? So in terms of the additional features, let's go through one important thing for the VIP. And I hope you guys are doing well and trading well. We'll have more great trades this weekend, I'm certain of it. Looking at these frameworks, I call them bells. Rock the bells, I say, right? It is a derivation of a bump and run, an expansion, boom. And why I say rock the bells, they look like bells, right? They just do. They look like bells that may rock back and forth, but we like, bam, to rock them to the upside. We need that bell expansion formation here. Boom, rock it to the upside. Boom, rock to the upside. It's not a guarantee, but I'm going to put it in context for you right now. I want to shout out to Mordecai in our group. Mordecai did come up with the potential for the diamond top formation here. It's frustrated a bit. It is frustrated a bit, but good eyes, Mordecai. I pay attention when you pay attention. That's what I'm going to say to you, Mordecai. I pay attention when you pay attention. It's nice to see that. This is in an older New York Institute of Finance book. They have a tendency and essentially general likelihood to serve as a top line formation. So right now, the bulls have a pattern. The bears have a pattern. The bears have the diamond top formation, which can act as a continuation, by the way. Can act as a continuation if we could break up and over that level of resistance. A little bit dangerous because we just did that. So be careful. We break out, fake out on multiple patterns. We had a bull pennant in this zone, fake out. Let's go through this very quickly. Very important. I hope you guys have a good weekend. Again, London with Bitcoin Spike, former hedge fund owner, private, non-SEC, and not financial advice. But looking at the pattern framework here, we had in the backdrop the diamond. But what did we have? We had a bull pennant, move to the upside, symmetrical consolidation. Make sure you're looking at this on a big screen TV. Guys, not just on your handheld. And what else did we have? We had a nice in this zone if you guys traded this. Not only did we have a bull pennant breakout, we also had a very nice flat top resistance ascending line of support. We had just a beautiful pattern to complete. Boom to the upside. Guys, an ascending triangle. And what did it do? It frustrated. Bam, to the downside. So it was 2 or 3 patterns that didn't complete. I'm talking about the bells. I'm talking about the modified bump and runs right now because they're very successful. There's a reason I focus on them. And I want to shout out to anyone who's new to the station. You're invited to join our VIP top level membership of, guys, our trade group. Take a look at this. Precedingly, and yes, we found the triple bottom. Boom. Congratulations to the VIP who traded. No, a lot of VIP traded. We got a great group. This specific expansion here, that modified bump and run, just like you saw on the micro here recently, you guys see that served as the bottom formation in 2020. Boom, boom, look at that. Rock the bells, bam, up to 65,000. From what was that, about 3,500 or so, that low? Yeah, about 3,750 or so. From 3,750 up to 65,000, preceding all-time high. What got you there? Rock the bells, guys. Boom. VIP is what we do, guys, that modified bump and run. So I'm going to encourage you guys to pay attention. If you need to rewatch this video, we'll be in the back, but resistance, support, resistance. Yes, guys, key cross trend line in effect. And the important thing about this video, why I needed to bring it to you, I did a lot of work for this video, just to let you know. Did a lot of work for VIP. This level of resistance across the top, yes, we're going to have a higher threshold for breakout of this pattern bottom line. So yesterday I drew this 20x up and above. You have a little bit more breathing room if you're looking for a breakout trade technically. All right. Okay. We have that hourly threshold to get up and over. The hourly, that's going to be expressed by the candle wicks on the daily. You know that. But we look at the hourly and the 4 hourly consistently, guys, in line with the candle wicks. So the resistance, support, resistance, this cross trend line is in play. In addition, we have that upside target. I was going to say, guys, stacking on $6,000 to 25% move from the current price would be beautiful. We'll also take that $4,000 stack on top, the 16%. One's indicated on the daily, one's indicated on the daily, and one's indicated on the hourly. The more aggressive is going to be the hourly. That specific target I'm going to say 30,000 will be the hourly target, and the daily target's going to be lower. Just minded, guys. Minded. I'll mind it, guys. The 27.7 thousand is a lower daily target. We'll discuss the details in the back. This is London with Bitcoin Spike, trying to get through this specific video. Got to get in the back, and we have to trade. So I want to cut this in one take. You guys will join VIP with this link here on Twitter, please. This is your official invitation. You'll see here, Bitcoin Spike, former hedge fund owner, non-SEC, private, and this is not financial advice, but we want to get you involved in leverage. We want you to start trading. Go ahead and hit the first pinned tweet. Once you join, if you've already joined, make sure you hit that first pinned tweet, put I am VIP, and you can join from YouTube, of course, guys. But I am VIP, boom. When you tweet that response to that first pinned tweet, that will put you in touch with me. From there, guys, we'll put you in the back. We'll get you in the winner's circle, and we'll start to see returns like this from you. I know we will, guys. And if some of this seems like, wow, I didn't know the market can do that, it seems impossible, don't let it be a mystery. Let 2022 be the year that you're building your trade set. It's 2022. We're building VIP. This is London with Bitcoin Spike. You guys have a great night, and we'll talk to you soon. It's going to be a great VIP weekend. Thanks for your time. We'll try and stream tomorrow. Bye-bye.